I thank the chair, and I noticed that my friend and colleague from Texas talks about the current system discriminating. Well, the current system discriminates against small businesses and people who can't afford the massive cost of insurance or care. And that's the truth. My colleague refers to an icky kind of coverage. Well, the fact of the matter is we have a large segment of the American people who are trapped in so-called coverage, but they're not able to get care. And that's why we're here. We're trying to increase options for the American people. And my only concern about what we're doing with this legislation that I wholeheartedly support in trying to encourage small businesses and give them options to be able to provide better options for their employees is that I don't believe that in America you should only be able to get insurance through government or your employer. We should be freeing up the system. We should be embracing healthcare freedom. We should be creating an environment where the American people control their healthcare rather than employers and government. That's the truth. So I've offered an amendment to simply spell that out in the form of a sense of Congress, that it's a sense of Congress that the future of healthcare lies in healthcare freedom, not in socialized medicine, that Congress should take steps to address the broken healthcare system by restoring free market practices to lower costs, that coverage is not care, and expanding direct access to healthcare should be prioritized over expanding access to coverage, and patients and doctors, not government bureaucrats or insurance bureaucrats, should make healthcare decisions. Now, why do I think that? Well, the deals that are struck with the government by big corporations are the problem. For example, most recently through Obamacare, it guaranteed their actual growth and profit. For example, Anthem had a 344% increase in government revenue from 2010 to 2020. United Healthcare had a 198% increase. Cigna, Anthem, United Healthcare, and Humana have seen an average increase of 562% in their stock prices from January 2011 to January 2021. But here's the kicker. In 2018, for at least three of these companies, the majority of their revenue comes from the government. United Health, 53.4%, Anthem, 58.7%, and Humana, a whopping 86.9%. It is that corporate cronyism that is reducing options. They're making it more difficult for the American people.
Good afternoon, friends. So this is it. State lawmakers are finally taking action, and billions of dollars in federal aid are now being used towards new relief payments. In just a few days, one-time direct checks worth hundreds of dollars will be deposited. Friends, this is necessary action as millions of Americans are continuing to struggle due to the crisis. So please make sure that you watch until the end of this video to hear about all of the details. Also, this coming Friday, I will be announcing more winners for the $75 Walmart gift card giveaway. My dearest friends, if you'd like to enter the weekly giveaways, please click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, my friends, the greater your chances of winning the giveaways. While our federal government is dealing with a debt ceiling crisis, many local states have cash surpluses and so-called rainy day funds. And as a result, 27 states are now considering cutting taxes or eliminating them altogether. According to the National Association of State Budget Officers, there's been 2 straight years of widespread budget surpluses amid recent state policy actions to strengthen their reserves. In 2020, reserves totaled $70 billion, and by 2023, they are projected to reach $136 billion. The Institute on Taxation and Economic Policy suggested many states now have tax cut fever and are looking at offering property tax cut and rebate checks, reducing the amount of income taxes paid, and in some cases, like in Mississippi and Arkansas, cutting state income tax altogether. CBS News has noted that there are a number of reasons that state lawmakers have provided for the move. This includes making their states more economically competitive with other states, boosting economic growth, and helping taxpayers who are struggling with inflation. In particular, for Mississippi and Arkansas, having no state taxes would also be a boom to attract businesses and new households. Georgia Governor Brian Kemp recently signed a bill that will provide Georgia residents a special state income tax refund. This means you may end up seeing $500 in your bank account very soon. Single tax filers and married people who file separately will receive $250. Head of household filers will get $375, and married couples who file joint returns will get $500. It is based on an individual or couple's tax liability. Another round of tax rebate checks are also on the way in New Mexico. New Mexico residents can expect to get paid as soon as next week. For those that use direct deposit, the money is expected to hit accounts around June 21st. Paper checks will go in the mail at the end of June throughout July. This will be the second straight year that residents will receive rebates. This year, single filers will get $500, while joint filers will receive $1,000. The governor's office says the state taxation and revenue department will send out $673 million in total. For any non-tax filers, a relief payment option will be available on a first-come, first-served basis through the State Human Services Department. The New Mexico legislature allocated $15 million for these type of relief payments. An average American income is not enough for a comfortable living in 2023. According to a recent Gallup poll, the typical United States family earns about $71,000 per year. Yet the average American believes a family needs at least $85,000 in annual household just to get by. That finding tracks with a recent study, which found the average American worker needs almost $69,000 in after-tax income to live comfortably. That works out to about $85,000 in total income. Millions of Americans earn too little in 2023 to attain a decent standard of living. And many are feeling the pinch after 3 years of relentless economic headwinds. Inflation in the United States surged to 5% in 2021 and then 8% in 2022. It now stands at 6%. Rising prices prompted an unprecedented run of interest rate hikes by our Federal Reserve, lifting the benchmark federal funds rate from effectively 0 to about 5% in just over a year. All of this came amid the crisis, which pushed our nation's jobless rate close to 15% at the height of the national lockdown in 2020. The Gallup poll found that 30% of Americans believe a family needs a six-figure income to get by in your community. Only 14% of respondents said a household could make do on less than $50,000 a year, and even that threshold is $20,000 higher than the federal poverty line for a family of four, which is $30,000. One key factor in rising living costs is spiraling housing expenses. Monthly rents have outpaced inflation. And last spring, the median monthly asking rent surpassed $2,000 for the first time. Housing prices have surged by more than 40% in 2 years, from an average of $383,000 in early 2020 to $553,000 in late 2022. Well, my magnificent and most marvelous friends, that is the end of my daily stimulus update video for this Wednesday. My dearest friends, thank you so very much for joining me here and for being part of this community. To say thank you and to show my appreciation, I will be announcing several winners this coming Friday for the Walmart gift card giveaway. My dearest friends, if you would like to enter the weekly giveaway, friends, simply click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, my dearest friends, the greater your chances of winning the giveaways. Thank you and have a wonderful and very blessed week.